Alvotech completely missed consensus across the board for Q2 2026. I mean, revenue came in at 106 million, which missed the 111.5 million estimate. And adjusted EPS, negative 5.4 cents, well below the estimated negative 3.68 cents.
Yeah, it was an ugly top and bottom line. But despite that, management actually stood their ground. They reaffirmed their full year 2026 guidance, so they're still projecting 650 to 700 million in revenue and 180 to 220 million in adjusted EBITDA.
Right, and the stock reaction was wild. It flatlined after hours, but then the next trading session, it just rocketed up over 7% on like 34 times normal volume.
34 times, exactly.
So that's the mission for today's deep dive. We are looking at Alvotech's latest earnings report and balance sheet to figure out why on earth the market rewarded such an abysmal quarter with a massive rally.
Well, the answer really lies in how they generated cash this quarter. If you look closely at the first half segment breakdown, there's a hidden lifeline. Physical product revenue just fell off a cliff, dropping 48% to 105.9 million.
Wow, 48%. That is a massive drop.
Oh, absolutely. But what kept the financials afloat was their license and milestone revenue. That came in nearly identical at 105.7 million. And you have to remember, those milestone payments are essentially pure profit tied to development goals.
So they carry near 100% margins, right?
Exactly. So that influx of cash totally masked a brutal reality on the product side. I mean, if you isolate just the Q2 product margins, they collapsed to a mere 6%.
Just 6%.
Yeah, which dragged their blended gross margin down to 51%.
You know, because they make everything in-house, their vertically integrated manufacturing operation is honestly a lot like a massive freight train. When it's barreling down the tracks at scale, it is incredibly efficient.
Right, very profitable.
But the second you hit the brakes to, say, upgrade the tracks, the train stops, but the engine just keeps burning coal. Those massive fixed costs just eat your margins alive until you can get the momentum going again.
That's a perfect way to look at it. And that sudden stop, that was a deliberate choice by management. They initiated a planned manufacturing pause for quality system upgrades at their Reykjavik facility.
Ah, so that's why they couldn't ship new inventory.
Exactly. That directly caused the 48% product revenue drop. The market forgave them because operations actually returned to normal volumes by the end of Q2.
Right.
And more importantly, the FDA closed its inspection of that facility with a VAI rating.
Which is voluntary action indicated. So for those tracking this, a VAI just means the FDA found some minor issues that need fixing, but nothing serious enough to halt operations.
Right, or block new drug approvals. It essentially clears that regulatory dark cloud hanging over their pipeline.
Okay, but the financial storm on their balance sheet is still very real. I mean, they are carrying a staggering $1.31 billion debt load.
Yeah, it's heavy. In just the first 6 months of the year, they burned $72.2 million on interest alone.
Just on interest? Wow.
Yeah, which drove operating cash flow to negative $80.2 million. So to bridge the gap, they had to secure a $165 million equity raise.
Which dilutes the share base by roughly 44 million shares, plus they took on a $75 million term loan.
Exactly, just to keep the lights on.
I have to push back on that reaffirmed guidance here, though. First half revenue was only $212 million. To hit the $675 million midpoint of their full-year target, they have to generate over $460 million in the second half.
It's a huge leap.
Right. Is this highly back-weighted guidance just a pipe dream? It looks completely reliant on pending Q4 FDA decisions for 3 new biosimilars, ABT03, ABT05, and AVT06.
The math does require an incredibly aggressive ramp-up. But institutional investors clearly bought into the story, given the massive volume behind that 7% rally.
Yeah, their betting management can actually execute.
Exactly. But, if those FDA decisions slip past the fourth quarter, or if commercial orders don't materialize instantly upon approval, they will miss that guidance.
And face immediate cash flow strain.
Oh, without a doubt.
Which leaves you, the investor, with a fascinating dynamic heading into a high-stakes fourth quarter. Alvotech's vertical integration is the ultimate double-edged sword. I mean, it promises massive financial leverage and profitability when you're operating at full scale, but it severely punishes any operational hiccups along the way. Make sure to follow the show for your daily earnings coverage because we will be tracking exactly how this plays out.